In global finance today, inflation across the Eurozone is expected to spike this year, but experts say the jump will be temporary. According to a new quarterly survey from the European Central Bank, inflation is projected to reach 2.7% on average this year. However, forecasters expect it to cool down and return closer to the bank's target rate of 2% by next year. While experts also predict stable prices extending into the following 2 years, they did caution that economic growth across the region may be slightly slower than previously anticipated. Turning to emerging markets, the International Monetary Fund is warning that economic momentum in Africa is facing significant new hurdles. According to the fund's Africa director, economies across the continent were showing solid growth, lower inflation, and declining debt levels before the recent geopolitical crisis. Now these nations are grappling with slower growth, rising oil prices, and a drop in money sent home from abroad. The International Monetary Fund advises that any short-term financial support should be highly targeted and temporary to protect long-term development goals. European financial markets opened mostly in positive territory this week, despite renewed trade tensions and geopolitical uncertainty. A major highlight was the telecommunications sector, where shares of Nokia surged 7% after news of a major business acquisition. However, the mood was less optimistic for European automakers. Car manufacturing stocks tumbled 1.6% following a threat from the United States president to impose 25% tariffs on European Union cars and trucks. Meanwhile, global oil prices edged slightly lower, with Brent crude falling to $107.38 a barrel.